El Grupo Albornoz presenta el único noticiero de bienes raíces desde New York, Tu Casa TV.
Hola, ¿cómo están? Bienvenidos nuevamente a otro episodio de Tu Casa TV. Les saluda Marian Albornoz, su TV Realtor. Yo me encuentro con, por supuesto, mi socia Dora Omana, que está aquí presente en Tu Casa TV. Y también tengo a Amir El Shafi. Obviously, we want to switch to English. Don't get scared that we want to do this interview. He was like, what is she saying? No. Amir, thank you for coming here. Tell us a little bit about you. What company do you represent?
Sure, yeah. Thank you guys for having me. So yes, my name is Amir El Shafi. I'm with Annie Mac Home Mortgage, the neighborhood mortgage group. And I'm a branch manager out of Brooklyn, New York. I've been a loan officer for 18 years. And just 1 month ago, I received the President's Club Award and ranked the top 24th loan officer in the country.
Congratulations.
Yeah, within our company.
Interesting last name. Where are you originally from?
So I'm born and raised in New York, but my father is from Egypt. And
my favorite place.
Yeah. Yes, and you do look like you could be Egyptian.
Thank you. Maybe I have something to do with Cleopatra or something, right?
No, you have no idea. When we went to Egypt, that was this year. Oh, it was March, right? We went to in March. Yes. Okay. Mm-hmm. So she was like very into the character.
Yes.
She got into a camel.
Yes.
And then she put a crown, a gold crown, and everybody was calling you Shakira there. Shakira.
Yes.
But she wanted to be Cleopatra. So it was.
She was just dying because she didn't look like
like a
Cleopatra.
What?
So she couldn't do it. She would you have done it?
Amir, I will tell you something. I wasn't Cleopatra, but I was like an exotic thing creature. I got people coming to me like it was like a group of girls, teenagers coming to me. Can we take a picture with you? I'm like. My other friend was like, maybe they have seen you in Telemundo. I'm like, they don't watch Telemundo in Spanish here. Hello,
right.
And it's I don't know. It was something. I don't know. People were so nice with us. It was the country of your father is unbelievable, beautiful.
It's a beautiful country. It's amazing. It's I really enjoy my stay and looking forward.
When was the last time you were there?
I was there in 2014. I was supposed to go there. Me and my wife had a trip booked in 2020. It was April 2020, and then the pandemic, so we had to cancel the entire trip. So we're looking to go back again now, though.
You never took her there before?
No, I haven't. Oh. And so we're gonna go out there.
Unbelievable. I mean, the pyramids is just something unbelievable. So we're happy that you're here today because we were talking about what we always talk about here is real estate, and you were telling me some of the programs that you have available for our community and everybody in general.
Right. There's three in particular that I would like to highlight today, and very quickly. So it's the 2-1 buy down, it's the cash to keys program, and then it's our non-QM bank statement.
Which one is the exotic one?
Sorry,
but if I have something to do with Cleopatra, I have to go with the exotic products.
Right. So
otherwise, it's not fun.
Right. So two of them would be exotic. So it would be the non-QM, which is the bank statement loan program.
What does non-QM?
Non-qualified mortgage.
Correct.
So
it's not the traditional loan that you bring all the documentation. It's not the cookie cutter type of loan.
No, it's the opposite. So there's really, they don't follow the traditional mortgage guidelines with the governments like Fannie, Freddie, and FHA and VA or Ginnie Mae. It's their own little thing, and pretty much you just have to have a decent credit score of 680 and above, and you have
which is not bad. 680 is
reasonable still.
That's decent. So, and you can do with 2 months of bank statements showing a 25% down payment, you can get yourself into an investment property, or if let's say you're self-employed or 1099, and a lot of people who are self-employed, they write off a lot of stuff when it comes tax time. So if that is the type of business owner that you are and you want to buy a house and you just haven't shown enough income, we could look at your bank statements over a 12-month and 24-month period and then come up with their own calculation. So somebody could have, let's say, $240,000 in deposits over the course of 12 months. So that's 20 grand a month, right? We'll probably take like, 30 or 50% off of that. So now you have a $15,000 or a $10,000 monthly income rather than the $30,000 that you're showing on your tax returns.
Now, is that entirely limited for investment properties?
No, so the one that I just discussed now with the 12-month and 24-month bank statements, that's for purchasing a primary residence.
Primary residence.
And the minimum down payment would be 10%.
Oh, wow,
10% is
that's
not bad. I
fantastic.
thought you were going to say 20%.
How about the interest rate? Is it compatible? I mean, is it
It's-
interesting or?
I mean, look, so they're providing a service, to people who, wouldn't be able to get a mortgage. So they, charge a little bit higher. So if the going market rate for a traditional mortgage is, let's say, 7%, then you could expect anywhere between 1.5% to 2% higher. So let's say 8.5% to 9%.
So there is no excuse for somebody now to invest in real estate because it's really a good chances right now. There is a lot of programs in the market.
No, but the lay person gets a little worried, Marian, when these type of programs come to the market because they fear that the same that happened in 2008 with all this creative financing is coming. Do you think that we are in that area? Do you think that that's
No.
going to be happening soon?
That's the
or-
question of the always we get.
Yes.
No, so like what happened in 2008 was its own little bubble because, the business, the mortgage industry, the real estate industry was not regulated as much as it could
As
have been,
now, yeah.
and today it's highly regulated and it's practically bulletproof for things like that to happen again, which would, cause what happened in 2008
Right,
to happen
right.
again. Right now, the home values are still appreciating and there's no signs of it going backwards. Okay, interest rates right now have risen due to inflation, and I don't have a crystal ball in my hand to tell you exactly what the exact rate is going to be and what exact month next year it's going to be, but it's already been projected that we're going to land somewhere in a 4.5% rate market, give or take, within the next year. Now, what I can tell you is that the mortgage industry loves low inflation numbers. So when the CPI results came out a few weeks ago.
Oh, I'm sorry. What is CPI? Is for our audience.
So
to
this is a report that basically, all the efforts that the government is doing. It's the percentage of inflation and how it's either improving or getting worse.
Mm-hmm.
So this report came out a few weeks ago, and the numbers improved a little bit greater than what the expectations were, and we had a record-breaking day of an improvement in the interest rate market. The rates dropped in a single day, 0.75%. And
So what you're saying is that if the inflation goes down, the interest rate goes down.
Correct.
Right? It lowers.
Everything will
And
be
if the-
more normal.
Yes, and if the inflation continues to go higher, then the interest rate will go higher. Why is that?
Well, it's to stop spending.
Right.
The government would like, the feds want to stop people from spending money to slow things down a little bit and, bring the numbers down. And, it's working for the most part. There's a lot of people that, are refraining from purchasing, vehicles or homes, or they're slowing down with, their spending, even with shopping.
Yeah.
And that's because, everything is too expensive. The gas is high,
For-
groceries.
Now shopping is like killing me. Oh my God. But
Yeah.
I have to
I
you
have to
know,
stop you.
I have
because,
to stop
yeah,
because
we need to see.
I'm helping the economy by not spending.
But I love everything that you've been saying because you can tell your experience, everything you're saying. Like you are very knowledge in the field that you have.
Yeah.
That's the experience. That's all the years you have.
I'll say one more thing that's really important on this topic. Is now a good time to buy? I think right now is a better time to buy than what it was before, and I
Yeah.
think that this is going to be a very small window of opportunity for people to get the best deals that they're ever going to get on homes.
Mm-hmm.
Just 6 months to a year ago, people were waiving their appraisals, waiving their
It was
inspections.
crazy.
It was
They were
crazy.
bidding an enormous amount of
Paying
money
much more
over
money
the
for-
asking
yes.
price. Today, because
You
of
can
what's happening with
negotiate.
the rates, the houses are sitting on the market for a little bit longer. So people are now being able to. I got somebody that I just appraised this guy's house. He got $50,000 in equity over on the appraisal.
Wow.
You know, this
Amazing.
is stuff that you didn't hear about, you know, 6
Absolutely.
months to a year ago. This is, you know, appraisals were coming in less because people were bidding it so much higher. So now you're not waiving your inspection. You could even negotiate some stuff to get a little seller credit. You're not waiving your appraisal. You know, you're not coming in above the asking price. You can come in at the asking or even a little bit below. And, you know, whatever you might be paying a little bit more on a monthly basis due to your interest rate being higher, think about the thousands of dollars that you saved by not having to bid over.
So,
Yeah.
for our audience, what does that waiving the appraisal mean?
Yeah, so because of how hyper competitive the market was, you know, let's say I'm a seller and I list my house for $500,000, and there's 20 offers on the property, and they're all above the asking price. So I came in at 550. I could do two different types of appraisal waivers. I could say, if the house appraises for 500 and I offer 550, I'm going to give the seller the $50,000 over the
from your pocket.
yes, from my pocket, on top of the down payment that I already have to put down. Or I could do a partial waiver, so I could say, I'm coming in at 550, but if the house appraises for 500, I'll give you 25,000 on top. You know, you can come up with your own number for that.
Yes, Amir, and how dangerous is to waive the inspection?
Well, I've seen some people just waive everything altogether, but you know, if you limit it to just, you know, major structural and environmental, which is, I think a lot of sellers were letting people get away with that, I think you're going to be fine. I mean, it's just going to be like little electrical stuff, or you know, just
I
minor.
had a client that was like, no, waive everything. I just want the house, waive everything. I'm like, no.
Yeah, as realtors.
No, please don't, because
As realtors, we have, you know, this responsibility of representing our clients, and to what extent waiving all these contingencies that were created exactly
If you
precisely to protect the
Yeah,
consumer.
like-
once you waive them, to what extent are we representing
no,
our
and how
clients?
expensive it's going to be at the end if something goes wrong. And then when something goes wrong, it's going to blame this buyer, is going to blame everybody when we try. That's why if people hasn't been our case, because we always say, please don't waive the inspection, especially if you can waive some stuff, but like you said, like the most important thing is no. And if you want to do that, you have to sign something, like, because you wanted to do
Right.
it this way.
Well, in
Yeah.
New Jersey, the home inspections are election, are, you know, discretion. Is at the consumer's discretion, right? They're not mandatory. But as real estate agents, we need
Responsibility.
we bear certain responsibility within the transaction, so it's in our best interest to make sure that the client is actually understanding what they're doing. Waiving contingencies, although that I used to do this, and you know, I would waive certain conditions and keep the structural, the environmental, and the mechanics. And one attorney that represented as one of my seller in one of my transactions came back and said, "Hey, you're not doing anything. You're keeping everything that is that really matters within the transaction." And it's a way of, you know, of words and playing the game. It's
yeah.
interesting.
It's
Yeah.
creativity, you know. So-
It's creativity. But I think, like people have more opportunities now to buy a house with now the market that we have right now. You know, you have a way now to negotiate, to be able to ask for less in an offer. If you're making an offer and the house is 500,000, let's make an offer for 480. And so the house is not going to be sitting there, and it's going to be negotiable.
Right.
And
Yeah, and a lot of times, you know, depending on how much more somebody was bidding over, you know, you're going to be balanced out with right where the rates are today anyways, versus now your rate's a little bit higher, but at least you're not spending $50,000, $100,000 over
Right.
the asking price.
That's a
So that additional amount of money balances out the increase in the monthly payment. You know, so you can get into a house today at a discounted price and then let the property appreciate in value for you, because when the rates do drop to 4.5%, you can do the refinance. But guess what else is going to happen? The floodgates are going to open, and everybody that was not qualified because of the rates being too high, or everybody that was qualified and just wanted to wait until the rates dropped, are now coming back in, and now we're back into a hyper-competitive market again, and you're back into the bidding war, and you're back into paying over. But you know what? You don't have to worry about that. That's your home now, and you're refinancing into the lower rate, and you got the equity in your house instead of you having to purchase that from somebody else.
Yeah, because people were willing to give $100,000 additional of the price, and that has to be from the packet. So now, can you imagine like what you can buy with this $100,000?
Yes.
Another property, another investment.
Exactly. Yeah.
In terms of investment, investing in real estate, what programs do you have that our investors can use?
Well, we have every, product under the sun, but, the non-qualified mortgage, the bank statement loan is a great one for investors. We have, there's another product that's not necessarily for investors particularly, although purchasing a house is an investment, but we have a cash to keys program, which is intended for primary residences and second homes. And basically, if somebody is mortgage approved for a conventional loan or a VA or FHA, we can convert them into a cash buyer. So we'll buy the house for them in cash, okay? They can make a cash offer. We show proof of funds for them, okay? And then we sell the house back to the buyer using the mortgage for the same amount of money we paid for it. The only thing that they have to pay for is the transfer taxes, because we're not selling the house to them for a profit. Now, why?
How will the buyer benefit from that program?
I was just about to say, the reason why the buyer would benefit is, don't cash buyers get better deals?
Absolutely, yes.
So there you go. So in New Jersey, transfer tax is 1%, so that's $5,000. If you have a mortgage buyer that's coming in, mortgage approved, he's going to come in probably at the asking price, $500,000. But if you have a cash buyer, he's not coming in at $500. He's probably going to come in at $450, $470, like that. So you're going to pay $5,000 to save 30, 50 grand.
Oh, well, very
Interesting.
good. Exotic, like you like.
I love them.
Yeah.
Amir, thank you so much. We're going to have you next time, because we're going to have another episode with one of your team members, he's from Venezuela. I'm so happy to have Javier here with us.
Am I going to be in between two Venezuelans?
You're part Venezuelan, honey, so.
No, you are Colombian wannabe.
We have always this beautiful,
Yeah.
it's not a fight, this beautiful, how do you call it?
Sisters.
Rivalry?
Amir, thank you so much for being here
thank
with
you for
us
having
in
me.
Casa TV. And you're welcome to come back again.
Yeah,
And
thank you.
let's have Javier next time, okay?
You got it. All right.
Thank you.
Bye, guys.
Thank you. Ya venimos con más de Tu Casa TV.
El Grupo Albornoz presentó el único noticiero de bienes raíces desde New York. Tu Casa TV.